Welcome back, ladies and gentlemen. How are you guys doing on this beautiful Monday, as we like to say in the country? Um, I um, I pray y'all having a great I pray y'all had a great weekend, and I pray you have an even better, even greater week coming up. So I pray today was a great day for you. I pray it was abundant for you and prosperous and joyous and happy and you know all those good things. And yeah, I pray that all of your families is doing well and all is well on your end of the spectrum. So with that being said, let's jump into the beginning of the week technical analysis, ladies and gentlemen. As always, let me give a quick disclaimer. This is not financial advice. Anything that I share throughout this analysis is for educational purposes only. I repeat, this is in no way financial advice. In every single thing that I share throughout this analysis is strictly for educational purposes only. Cool beans? Cool beans. Educational purposes only. Educational purposes only. Educational purposes only. This is not financial advice. All right. Now that we've gotten that out of the way, hold on, let me get a sip of water. How about Bitcoin? Pew, 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 pew. Ah. All right, ladies and gentlemen, let's jump into it. As always, starting out with the dollar index, right? We like to use the dollar to gauge the rest of the asset classes that we trade, which is forex, foreign exchange, right? Forex, um, futures, metals, and crypto. So we like to use the dollar to gauge the rest of those asset classes, meaning that those asset classes either correlate with the dollar, meaning they move in the same direction as the dollar, or they um inversely correlate with the dollar, meaning they move in the opposite direction of the dollar. So depending on which direction the dollar is moving in, we can pretty much gauge which direction other asset classes should be moving in. Make sense? Cool beans. So looking at the dollar, I told you guys on my last class that if we did break above these monthly PD arrays, that I would look for the dollar to run these highs, right, or come up into this area of price, right, and then pull back down to these monthly PD arrays that it broke through, right? So we see the breakthrough, we see price come back down to those monthly PD arrays, came down inside of it, and then what do we see price do? We see price springboard up to the upside, right? Um we see it run bullish, right? We see it run bullish off of those levels. And I told you guys that this area would be the area that I would be interested in seeing price run to. So as you can see, we're almost there, right? We're within the vicinity of that area. So yeah, um where I expect the dollar to continue to run higher, right? So with that said, um we know that currency pairs tend to inversely correlate with the dollar, mean they move in the opposite direction that the dollar move in. So with me being bullish on the dollar, right, wanting to see the dollar run up into this monthly buy side liquidity in this big pool, this red circle that you see here is my equivalency to a pool of liquidity, right? Pool of liquidity. So being that I want to see price for the dollar run higher up into this monthly buy side liquidity, pool of liquidity, right? I expect currency pairs to run lower, right? Especially the currency pairs that we trade, being Euro USD, GBP USD, and NZD USD. And as you can see, I've had this area marked out, right? I had this marked out in our last class. Go back and watch. Go to my YouTube channel and watch my last class, and you'll see everything that I'm discussing now. I discussed then. I told you guys that I wanted to see the dollar run up to that pool of liquidity that I just showed you. And I told you that I expected Euro USD to run down to this pool of liquidity here that I have identified on the chart here, right? So we can see Euro USD is already down into that level, right? Now, depending on how price reacts to this level, whether we respect it or whether we just completely disrespect that level and slice through that level like a Jinsu knife, right, will determine my next buy-in for Euro USD, right? But being that we're inside of the level that I was targeting, my analysis has played out for this move. So it's nothing for me to do now but sit on my hands and let price show me and tell me what it is that it's going to do next, right? So taking a trade now, right? If I was to take a trade out of Euro USD, I don't trade currencies no more. You guys know that. I go over currencies for my students, for my paid subscribers, and my YouTube followers, right? And so if I did trade Euro USD, I would have been in this sell from up here, right? And I would be exiting this sale now, right? Would I even be interested in buying? I don't know. It depends on what my profits would have been in this trade here, right? Had they been, what some may say, small profits or not, I might take this buy. I might try to take this long back up into this sell off here, right? You can see we have a um, volume imbalance right here where we have wicks running through each other, but we have no body. We have no closing in this area, nothing but width. We know that as a volume imbalance, right? If it was a complete gap right there, then we would call that a liquidity, right? Because the chart would be void of price in that area. So if I did trade currencies and I was exiting this short or this sell, I would only be interested in taking buys back up into the premium level, or at least to this volume imbalance, right? And then maybe a second exit up here in this premium of this daily candle here, right? But I would only be interested in longing euro from this level, right? And euro could break down some more, right? Because we haven't ran this low yet, right? So we could continue to break down. So I wouldn't be interested in taking a buy from this level until we run this low and got back above it, got back above here, right? That's the only time I would be looking to long. But now I'm not interested in anything because my trade, my analysis has played out, right? Cool beans, cool beans. And it's going to be pretty much the same. Well, GBP USD got a ways to go. So you still got play. See, and this is where knowing which markets to play in and which markets not to play in comes into play, right? Because if you was in that Euro USD trade or you missed that trade, it wouldn't be wise for you to go try to chase that trade right now, because as I just identified, Euro USD could continue to sell off some more, right? Or it could just completely slingshot to the upside from where it's currently at, right? So if you're not coming in with an already mapped out analysis, a mapped out plan, you're really just gambling now if you're chasing the Euro USD trade. Cool beans, cool beans. But like I said, looking at the pound, there's still room for play here, right? There's still room for play here. Over 270 something pips of room. So that's a lot of pips. That is a lot of pips. So if I was interested in taking a currency trade, right? I would look for the pound to break below this shaded area and come back and retest it. And I would take a short either off the bottom of that shaded area or consequent encroachment halfway mark of that shaded area down into this pool of liquidity. Cool beans, easy peasy, easy breezy. Moving on to NZD/USD. Same thing. Still got some play. Still got some play. And yeah, you should have been getting in on this sale up here at the bottom of this shaded fair value gap or consequent encroachment, just like I just showed you with the pound, right? That should be in your entry for that sale. And how much? You got a little, you got some pips, 100 pips, ain't, and that ain't, that ain't no chump change. That's a good amount of pips for a currency pair. So still got played with NZD/USD. So, but I don't know if I would chase this trade. The best option as far as currencies would be the pound, as far as taking a short, right? Because you still can wait for it to come back down and get your perfect entry. With NZD/USD, you miss your entry. So I would either wait for it to come. It shouldn't come back up, right? You can enter right here, but your stop loss need to be very conservative. You know, price shouldn't come back above this consequent encroachment, right? Shouldn't come back above this structure here, right? But you got to think, even if you went above consequent encroachment, that's 72 pips. Even if you went above the bottom of the fair value gap, that's 50 pips. So I probably wouldn't take this trade. I probably would leave this alone because your risk is going to have to be substantial in order for you to get in that trade. But some of you guys have a healthy appetite for risk. Me, I've learned that the better you manage your risk, the longer your accounts last. So I don't have a healthy appetite for risk, me personally. So that being said, moving on to futures. I told you guys in my last analysis that depending on how we broke above these PD array levels, right, I would expect um, ES to run this monthly buy side liquidity. As you can see, we broke through that um, PD array level aggressively, right? You don't even get a chance on the daily here, right? But if you break it down to the 4 hour, right, you see we broke through those daily PD arrays aggressively, right? Right there, boom. This is where breaking your time frames down come in handy, guys. So you can see on the 2 hour, right? See the build up. See we breaking through. These are 2 hours candles, so these are aggressive moves on a 2 hour time frame. These aggressive bullish candles to the upside, right? Especially this one, right? Creates a nice fair value gap right there, right? That right there was your signal really, that price that the market was out of here, right? Really didn't give you a lot of opportunity to catch this run up. And it's usually like that. That's why you gotta be on your shit when you trading futures. You damn near gotta be perfect, right? Or you're gonna suffer some major drawdown that's really gonna play with your emotions if you don't have the experience to regulate those emotions. Understood? Cool beans. So that's why we as day traders, we're on 15 minutes and lower anyway. So when we do see that break, like here, here, we do have opportunities to get in the market, right? We see a dip back down into this fair value gap right there, right before New York opening bell, right? We see price run up. We see another opportunity here. Lunch hour, dip what? Back down into this fair value gap. So when you're on your lower time frames, you do see your opportunities. But as you can see, when price is extremely bullish, you're not gonna really see those opportunities on your daily and your 4 hour time frame, sometimes even your hour, as you can see. Yeah, I mean, you had opportunities here. We broke there and broke there. So we did have opportunities on an hour, but you have to be in front of your chart and right there ready to take the opportunity, ready to take the trade. Because if you're not, you only get a small window, right? You only get a small window, 1 hour window here to get in there, another hour window, 2 hour window to get in there, and then price runs, right? Your best opportunity to get in on this buy was off of those monthly PD arrays that you wanted to see price retest, right? We seen price retest it. The body of these daily candles is respecting the hell out of those monthly PD arrays, right? That's all bullish. Those are bullish indicators. When you see the body respecting monthly PD array levels, right? Remember, the higher the PD array level, right, the stronger that level is. So this is monthly. So when you're seeing those bodies respecting that monthly level like that, that's bullish, especially when we're bullish, especially when we're bullish, right? That's bullish. That's bullish. That's bullish. Cool beans. Cool beans. Now, here's where you know what I from a technical point of view, from what I've seen with futures, um they usually it switches up. Sometimes they're correlated with the dollar, and sometimes its futures are inversely correlated with the dollar. It does switch up. And what I've been noticing lately is it switches up quite often. There was at one point in time when I first started trading futures was always inversely correlated with the dollar, meaning they were moving in the opposite direction of the dollar because they used to trade correlated with currencies. And we know currencies move in the opposite direction of the dollar. So for a while, futures was trading with currencies moving in the opposite direction of the dollar. As now you can see from looking at ES, it's correlating with the dollar. We can see here with our two eyes that's in our skulls that the dollar has been moving up since September, since the beginning of November, and we can see that ES has been moving up since September, beginning of November as well. Um, Looking at NQ, we see the same thing. September, we've been moving up. November, we've been moving up. So it's obvious that futures are correlating with the dollar, right? Positively correlating with the dollar, meaning moving in the same direction, right? They're moving, futures is moving in the opposite direction of currencies right now, which are selling off, which we just went over, right? And is moving correlated with the dollar in the same direction of the dollar. So um it's kind of hard to gauge futures right now as far as trying to use correlations because sometimes it's correlating with the dollar and sometimes it's not correlating with the dollar. So what I've just been doing is just strictly reading price action. I've been saying screw trying to use dollar futures correlation or inverse correlation to gauge futures. I've just been using raw price action, straight price action, and it's been working for me. So, and I mean that is the ICT way. That's what I trade anyway. Is price action and time and price, right? And liquidity. And so, I mean, that's what I've been doing, and it's been working beautifully for me. So, with that being said, um, I'm expecting the dollar to continue to run higher, right? Until we get up in here. So, that being said, I do expect futures to continue to run higher as well. Um, do I anticipate a pullback? Yes, I do, because as we know, the market can't just continue to run in one direction. As we see here, we're always going to get corrections. We're always going to get corrections, corrections, corrections. So it's only going to be so long before the S&P 500 have to correct. Where is it going to correct to? Where is your eyes naturally drawn to? First, imbalance here. First, fair value gap. First, fair value gap here, right? AKA imbalance here. Second one is this big giant imbalance, AKA fair value gap that we have here. So, naturally, we're going to anticipate price correcting down to these imbalances or aka these fair value gaps. This being target one, this being target two. And then we will see how price react to those levels to determine where we're going to position ourselves for the next move, right? Trading is really simple. We just complicate it with our greed and with our lack of discipline. Point blank, period. There's no way around that. So, that being said, I am waiting for price to show us some displacement to the downside, right? Which is already starting to do with this high being made, right? Well, I mean, I'm sorry, with this high being made, and this low being made, and this higher high being made, right? And this lower low being made here. So now we're just waiting for price to close lower. So I want to see a little bit more displacement. This wasn't really a good enough displacement. I want to see us, I mean, it's really good enough being that we close below this gap, right? I want to see us respect this gap, meaning I don't want to see us break and close back above it now that we've seen this displacement to the downside. And I would like to see us continue to sell off back down to this monthly buy side liquidity, right? Running this low and digging down into this imbalance here, right? That you can't see clearly on the 1 hour time frame. But if we was to mark that area, right, this move, we was to mark there on the hour time frame and bust that bad boy down to the 5 minute, then you would clearly see those imbalances once you made your chart big enough, right? So this is that area that we mark on the hour time frame, right? So we can clearly see the imbalance in price, right? See this, that imbalance here, right? Fair value gap there, right? See that gap? See that a lot better. And sometimes you may have to break it down to the 3 minute time frame, let me take that back. Or even a minute. But as you go lower, you will start to see the fair value gaps where price or the algorithm, should we say, is going to be magnetized to or drawn to. You see, clearly see this fair value gap here, right? So as I go back to the hour time frame, right, this would be, right, this low here, this imbalance here along with this low. I want to see us really, I really want to see price get below this, right? Even though that's a good play from where price is currently at. That's over 40 handles. That's a damn good play. That was a lot. That's a lot of handles, a lot of points, right? So I would be satisfied with just that play if I took this short from where price was currently at. And if I took this short, my stop loss would be above this last up candle, this last bullish candle. My stop loss would be above there. Um, and I wouldn't take this short from where price is currently at. I will wait for price to get as close to where my stop loss would be up into premium of this move down, which if you put your fib on this move down from the high of that last up candle to this low, look at your premium level. That would give you 79 around here. So I wouldn't even be interested in taking this short until price got up into here, right? And then if I'm looking at my chart, now if I just set my order and walk away, then it's gonna get triggered and I won't know about it until it happens. And then what happens happens. But if I'm like I am right now sitting in front of my chart and price run up into there, I may even wait for price to get as close up to the opening of this bullish candle, right? Or the closing, should I say, because this was the opening, this was the closing. I might wait for price to get as close as possible to the closing of that candle before I take this trade. And my stop loss would still be above the high of this candle, right? What am I doing? I'm mitigating my risk. I'm lowering my risk. If I enter from right here, and price does run up that high, then all of that is going to be drawdown. All of that is going to be playing with my emotion. All of that is going to be saying, damn, I should have waited. Damn, I should have took this trade. And you're going to be looking at about a couple of $100 of drawdown. And all of that is going to make you potentially exit that trade, right? When price could get all the way up to here, right? And then turn around and go right into where your first TP or where your only TP would be, right? Which I said is from current price like a 40 handle move. Exactly, right? But waiting for price to pull back up into the premium of this move down, right? You're getting more bang for your buck because then that turns into like a 49.50 handle move, right? And you're lessening your risk. Make sense? Cool beans. So that's what I'm expecting out of ES, right? E-mini S&P 500. And basically the same thing for NQ, right? NQ rent the monthly buy side liquidity. Now I'm expecting us to pull back down to correct some, to pull back down before we continue higher, right? And if Futures continue to correlate with the dollar and the dollar starts to sell off and run low, then I expect um NQ and ES to follow. But I will wait for price action to show me that and tell me that, um, rather than use the dollar as an indicator, if that makes sense. Cool beans? Cool beans. Now for the fun part of the class tonight. As we all know, Bitcoin is at 88,000. Bitcoin has hit 89,500 according to Bitfinex. Um, if we look at Binance, Bitcoin has hit high $88,746 according to Binance. And if we look at just crypto, um, it has hit $89,576. So we're gonna go with the two that says the all-time high is $89,500, right? Um, as you can see, this what I have drawn out is the previous growth percentage wise that we've seen in Bitcoin during the year of a halving, right? So all of these um markups that you see is during halving years, right? And it's showing you how much Bitcoin increased percentage wise during a halving season or during a halving year, right? So we're gonna look back at the first Bitcoin halving in 2012, right? We see that after the halving that year, in that same year, the year of the halving, we see that Bitcoin increased by 2000 over 2000%, right? You see it right here. I can't if I take my mouse off of it, it's gonna go away. But you can see it's right there. It says 2000% in parentheses. 2000%, right? That was the first Bitcoin halving, right? And then we see after that it just went ballistic in 2013, the next year, right? All right, we continue to go over. Next Bitcoin halving, 2016, right? Bitcoin increased 2,891%, 2,800%. So the first halving, it increased over 2,000%, 2,024%, I think exact, right? To be exact. 2,047%, right? 4 years later, for the second halving, it increased 2,800%, 2,891% to be exact, right? Right there, boom, right? Um, for the next halving in 2020, right? The previous halving before the halving that we're currently in, right? Last halving 2020, Bitcoin increased 655%. So it didn't increase last at nearly as much as it did in 2020 that it did in 2012 and 2016. But what you have to understand is how much, look at what price was at during the 2020 halving. It was at $9,000 during the the first Bitcoin halving. Bitcoin was still like worth pennies. I can we can go back. Exactly, just to see. Bitcoin was $12. I take that back. I lied. I apologize. $12, right? So this increase up to $266, that's a large increase because it increased from only $12, right? So the higher price go, the lower those increases is gonna be, right? Of course, right? But even at 655%, that's still astronomical gains for any asset class, for any financial market. I would think that anybody would agree to that, right? Anybody with a little financial literacy, because those are just astronomical returns, right? So for the last halving, Bitcoin increased 655% from around 8 grand. Let's see, just to be exact, from around 8 grand, $8,500 up to almost 70K, right? 655%. Now, this is the current halving that we're in. So I mapped out this halving, just being modest, saying if we at least increase in percentage by at least the same amount that we did the last halving, right? Which you can see I have on there at I measured this up to 654%. You see it in parentheses, right? And we did 655% last halving, right? Now, if we do at least what we did last halving, then you see where that puts Bitcoin price. I'm not making this up. That puts Bitcoin price at $481,000. Peak cycle. That means peak cycle, right? That's where Bitcoin should be at. That around that vicinity, right? Now, even if we only do half of that, that still puts Bitcoin around 240 grand, right? Peak cycle. And as we can see from looking at every previous cycle from the very beginning, right? It only took us about a year. And I really didn't even I didn't even use this high for the measurement of this this halving, right? I only used this high for the measurement of this halving, right? And that played out within a little over a little over 4 months. This played out a little over 4 months. Now, if I use this high for the percentage, right, which took about which took a year to play out, which would be about right because bull cycles usually last about 2 years, right? So if I use this high, that would put this percentage increase for the first halving at 9,000%, right? 9,000% that took a year to play out, right? Very first halving. Second halving, took took over a year, took about a year and a half, right? Second halving, right? Took over a year, right? Took about a year and a half, right? What I say, bull cycles last about 2 years, right? Third halving, 2020. Let's just use this one since this was the one I measured. Took about a year. Even if we use this one, well, that took about a year and a half. We can use that one. Took about a year and a half. Anywhere from a year to a year and a half before we reach peak cycle, right? That's what I mean by peak cycle, right? So 2000%, the second halving. I mean 28, I'm sorry, 2800% the second halving. 655. And I really think that the growth for last halving was so small compared to the previous two halvings because of all of the negative regulation that we had facing crypto throughout that time. Nothing but negative regulation. I think without that negative regulation, Bitcoin would have easily increased another 1000% during this cycle, right? There's no reason why we dropped from 2000% down to, I mean, because if we looking at the third halving, right, we're talking about 2800%, right? First halving 9,000, second halving 2800, this halving 2020 halving, the third halving 650, right? And like I said, I think that was due to the negative regulation and the negative sentiment that we had facing the crypto market at that time, right? Now, as I said, looking at where we're currently at with crypto friendly president elect being elected, everybody that's coming in with his administration is pro crypto, crypto friendly, right? He's already said that he's considering making Bitcoin the reserve currency of America, right? He's already said that all the Bitcoin that the U.S. government has, they're never going to sell it ever, ever, and all the Bitcoin that they seize from criminal entities and things of that nature, they're never ever going to sell. So all of this is very, very positive for Bitcoin and for crypto in general. So I say again, if we're in the current condition that we're in, and if Bitcoin does at least what it done for the last halving, that puts Bitcoin price around 400 and or around $400,000. If we only do half of that, that still put us well above $200,000, right? Price is currently at $88,000, guys. We are in the beginning of the crypto bull cycle. So, my advice for you is don't go chasing Bitcoin. Don't go trying to buy every crypto that you see come across your social media timeline right now. What you should be doing right now is sitting on your hands because you should already be in position, especially my team. Because what I've been doing since the last bull cycle is telling you guys what you need to be dollar cost averaging into while we're in a bear market. So if you did indeed take my advice, if you have been dollar cost averaging into those coins, into those altcoins and those meme coins that I've been telling you to dollar cost average in, hence ApeCoin, hence LimeWire, hence XRP, hence uh, Dogecoin recently lately. Um, then use hence helium mobile, um then you should be in position to become very, very, very well off throughout the next year and a half, 2 years, point blank period. And with that being said, I mean, if you can't see what I just broke down to you, and if you can't see how these cycles play out, I just literally showed you before your very eye how these crypto bull cycles play out. And if you believe that it's going to continue to repeat, and my question to you is if you don't think that, why do you not think that? And I just showed you for the last 15 years how these cycles have been repeating after every Bitcoin halving. The same thing has been happening, and you can see it literally starting to happen after this Bitcoin halving happened April of this year. What is there not to believe? You're seeing the historical data right in front of your eyes. So other than that, other than that, you don't want to believe it, or you're gonna let your skepticism cause you to miss out on what could potentially be the biggest wealth transfer in the history of mankind. So with that being said, I'm going to bring this session to an end. I think that this was very informative. I know I enjoyed it. I hope you enjoyed it. I hope you took something away from it. If you did, how about doing your boy a big favor and liking and sharing, but most of all, subscribing to my YouTube channel. Hey man, it really helps out a lot, guys. It lets me know that these analysis that I give you guys for free on my YouTube channel. It lets me know that it's helping you guys. It's changing some people's lives. It's empowering some people. That gives me a sense of purpose. That lets me know that I'm really happy. That's really why I was placed on this earth. So when I get that feedback and I see you guys subscribing and I see you sharing the content, that fulfills me as a human being, right? So that's why I say it really helps me out a lot. It's nothing to do, mom. It has nothing to do with money. I'm good there. I know how to trade. So it has everything to do with fulfilling me as a human being and letting me know that I'm fulfilling my purpose in life. So with that being said, I appreciate you guys tuning in tonight, coming out, getting this knowledge and empowering yourselves. As always, please let your family and friends know you love them while they still here. Please. And as always, peace and love, everybody. You know.